What's happening? What's happening? What's happening there? Oh, wait a minute. I forgot I was on Sativa Saturday. I turned off my y'all. Wait, act like y'all don't see that. Act like y'all don't see me right now. Y'all act like y'all don't see me right now. There you go. All right, we back. We back. We back. Now open your eyes. Y'all can see me again. Shout out to homie Zay. I pulled up to actually just give Zay his flowers because the homie Dave, his Wi-Fi was trash. And so I pulled up just to speak to Zay, and I ended up staying on there. Hey, speaking, look at Zay. Zay in here. What's up, Zay? What's going on? Zay in the chat. Hey, the link is in the chat. The link is in the chat. The link is in the chat. The purpose for the link in the chat, this is the link right here, is if anybody want to pull up and ask a question, or if anybody want to pull up and share anything, please just don't pull up and let the bird out of the cage. Hey, y'all, hold on for a second. What? What? Hey, do me a favor. You said what? Bring me my water. I left my. Is my water? Do you see a water on my dresser? If you don't see one, grab one off the out the refrigerator for me. Man, I'm thirsty as I don't know what. Man, I ain't got no water. Sorry about that, y'all. Hey, did I have it on? Okay, thank you. I'm parched. Let me get some of this high quality H2O. Delicioso. Thanks, son. Now, hey, man, this is what you got to deal with when you pull up the Tim's Tidbits, man. It is what it is. And speaking of, hello. If it's your first time tuning in to Tim's Tidbit, I'd like to say welcome. If it's not your first time tuning in, I still want to say welcome and give you a nice hearty thank you for always hanging out with me and the homeboy Spidey back here. Y'all see Spidey? What's happening, Spidey? If you don't know who I am, my name is Timothy Lee Rogers Sr. I go live on Al Gore's internet every single day, except for Saturday. And we talk about the price action with the ES. Sometimes we peek at the Dow and the NQ to see what they're doing, but we talk about the ES because I'm primarily a swing trader for the SPY, Spyleen as we like to call her. And I just help people try to get their aha moment. Because my homie Pat, aka PDub, we sat down one day and talked, and he helped me to understand everything that ICT was saying. And I was like, ah. So now I just get on Al Gore's internet and I show people what a full-time trader would do in any situation. Right? Speaking of full-time trader, I am a full-time trader, but I'm not a financial advisor or fiduciary. So let me put my banner on the bottom, if you will. Hey, man, that's all the spiel bill I got today. All I do is ask you to hit the like button. I don't charge for it. I got no beef for people charging for anything. As you all know, I've paid plenty of money for courses. I got the plaques to prove it. I paid upward of $4,500 for courses. I paid $100 for courses. I paid $600 for courses. I paid $1,000 for courses. And you know what I learned? Every course I paid for, I had already knew everything that they was talking about in the course. I was just paying a whole lot of money just to have a conversation with people who thought the same way I thought. And I just was like, oh, okay. They see the same thing I see. Okay, I'm glad I spent that $4,500 just to say that, hey, they see the same thing I see. Hey, ain't no shade on nobody, man. Charge for your time. If you feel like your time worth something, charge for it. I'm here for it. You hear me? But I'm out there just to reach the person who just want to learn this, who want to do it themselves, and they may not have the budget to shell out a bunch of money for a course. So, hey, you're my target audience. Let's see who's in the chat, shall we? Here to learn and share. What's going on here to learn and share? The homie Zay in here, like I said. Y'all make sure y'all check out Sativa Saturday. There be some good information Zay be getting out. He be sitting there babysitting he be babysitting all day long. You know what I'm saying? If I was still a smoker, I'd have to go to Virginia and show Zay what's happening. What's up, Pamela? What's going on? Cool it now. Hey, watch out. What's going on, KC? Where the rest of the Sunshine Band? I'm your boogie man. That's what I am. What's up, man? What's going on, FC? What's happening, Laverne? What's going on, Laverne? How you doing? Hey, them all the names I see, so that's all I'm gonna shout out. Y'all, let's go ahead and get into it, man. Oh, before we get into it, let me pull Al Gore's internet back up. Let me share my screen and pull up Al Gore's internet. And if you do not know, if you go to the link in the description below in the video that you're currently watching, man, why everybody mad at Dion for getting another job, man? Stop being mad at Dion for getting another job. Dion can get another job, man. Where's my video? Let's go to your channel. Okay, if you go to the link in the description of the video that you're watching right now, it show this first link right here. You see it says, watch the new ICT Concepts Explained Lingo playlist. What that is, if you click on that link, it takes you to a playlist of 8 videos, and I'm breaking down the lingo to the ICT concepts that I trade, the PD arrays that I watch for, and I break down what they are. The overview, I just give a basic over the basic lingo you'll need to know to be able to trade all of these PDA strategies. And then the rest of the videos is actually me telling you what the PDAs are and the way that I understand it. I give it to you straight off of ICT notes, and then I give it to you the way that I understand it in the hopes to help you get your aha moment, right? Then if you go to any one of the videos and go to the description, right? Go to the description, show more. It says download slides. If you click that download slides, it takes you to a Google Drive folder. Look, Tim, there's more in the folder. I wonder why. We'll get to that later. You can download the slides for all of the videos from the ICT Concepts Explained slides that I use in the videos. You can download them to keep notes on them. You can download them to follow along. You can download them for memorabilia. All I care. But they're what? All for the free 99. So going back, what's the second link in there, Tim? Let's see what the surprise second link is. Watch the new ICT Concepts Explained Price Action playlist. Oh my, that's part 2. That's part 2 to the 3-part series. Oh, we got part 2 finally. Yes, part 2 is out. Oh yeah, this third link. This is the most important link that's in my description. Ignore the ICT, ignore the Scheduler 101, ignore the buy the merch, ignore the PDub free. This one, it says support my son music. Click on this link and go listen to his latest CD called Banjo. Go listen to support my son music. If you're into rap music, click it and stream it on Apple Music, Spotify, whatever it is. If you're not into rap music, share it with somebody who is, because I know you know somebody who listens to rap music. So send it to him. He's 15 years old. He a good kid. Support my son music. Now, back to what I was saying. If you click on the link for the price action playlist, you have 8 more videos, 9 through 16. The overview is giving you an overview of what to expect in the series. Don't skip over it. Watch that one too. It's important. And then 10 through 16, it's just finding the mitigation blocks in price action. We're looking for the bullish and the bearish versions of them, right? We do a quick review of what it is. Then we go find it in price action. Yes, the slides are already made. I don't go through the actual price action and show you, but the price action is on the charts. I tried to make it very detailed, but I wanted to keep it short and concise. If I have to go through the charts and find it, it's going to be super long. The purpose of this is to make it short and concise. It's not to make you be ready to go out and do this right now. It's just giving you the meat and the potatoes without all the extra fluff and really deep diving stuff. This is giving you the meat and potatoes of what you're going to be using. And then that way, once you know what it is and you know what to look for, then you can put together a strategy and back test it and make sure it's effective. And that's part 3, the strategies. So part 1 is up, part 2 is up. And if you go to any one of the videos and click on the description, the link in the description that says download slides, you can be looking at video 1 or you can be looking at video 16. If you click on download slides, you see that there's 16 different PowerPoint slides where they're in PDF, but they're different, 16 different slides. You can download all the slides, and it's all for what? The free 99. And I know y'all just see me spit just now because I saw it. It was like, hey, man. Let's go ahead and get into it, man. I saw who was in the chat. I saw who was in the chat. What's up, Sanjay? When you pulled up in here, Father of Legends, what's going on? Taking a break from my cold and final. What's good? What's happening? Shout out Father of Legends. He say he's taking a break from his cold and final. Hey, I salute you already. I know you already done passed that. You already gonna do you 1-2. Let's go ahead and pull up the ES and let's see what's a goer zone with putting together the charts. Let's see what we looking at on the charts. Get out the way, Spyleen. We ain't coming to talk to you right now. We going to the ES. Let's go to the ES. Do anybody got anything before we get started? What's up, Sonia? What's going on, Sonia? The lady with the second prettiest smile in the Spider Gang. Y'all already know who got the first pretty. Oh, Valdez. What's up? When you slid up in here? I ain't see you up in here. What's up, Valdez? Shout out Sonya, the lady with the second prettiest smile in the gang. Y'all already know who got the first prettiest smile. Y'all seen her pull up the other day when she was trying to explain her side of the story. What had happened was, I liked it when you played the song. What had happened was, hey, let's get into it, man. We gonna pull up ES. And before we start doing it, since it's a new month, we pretty much at the beginning of a new month. We already had like 1 or 2 trading days. How many trading days we had already? We had 2 trading days already, but let's go to the IP to look back. For those who don't know what the IP to look back is, can y'all see those lines good? Can y'all see those lines good, or do I need to darken them up? If I need to darken them up, put a 1 in the chat. If y'all can see them good, don't put nothing in the chat. But while I wait till that hit, let's I'm explain what the IP to look back is for anybody who don't know. The IP to look back is an ICT concept that I learned from Michael, aka ICT, where the vertical line here is your anchor. Boop, that's where you're starting it, right? The vertical line, that's your anchor. Anchor the way, right? The first line, the shortest line is the 20-day look back. So you get a vertical, horizontal. You get a horizontal line and just stretch it out 20 days back, right? You get another horizontal line, stretch it out 40 days back. You get another horizontal line, stretch it out 60 days back. So because his theory is the algos look 20, 40, and 60 days back. That's pretty much a month of trading, 2 months of trading, a quarter of trading, right? That's his theory, that the algo looks back for liquidity in like a certain range. It will look 20 days back, basically a month of trading, 40 days back, basically 2 months of trading, 60 days back, basically a quarter of trading, right? The algos can look back anywhere within those ranges. And then it's up to you to get in sync with the algos to see how far it's looking back as far as what piece of price, what price range that is on, right? So with the IP to look back, with the, I see somebody said yes, so I'm assuming that you want them that you can see them, or do you want me to make them darker? I don't know. It just said yes. Here to learn and share is acting like cool it right now. I said 1 or nothing. I can't do all of them at the same time. I guess not. It just happened again. Do y'all ever have that when your leg feels like your phone is in your pocket, but your phone is not in your pocket, and it feels like your phone is vibrating? I just felt like my phone was ringing in my pocket, but my phone is not even in here with me right now. My phone's not even in here with me right now. I'm like, where they do that at? Okay. Just in case somebody couldn't see it, I darkened it up anyway. And if you could see it, it's all love. It ain't nothing wrong with it being darker. Oh, really? What's up, Robinson? What's going on, man? Hey, so yeah, you anchor it at a point. You know what I'm saying? The way I learned it from ICT, you could do it day by day, but a good practice to get into is like at the beginning of the month. You just start at the beginning of the month and look at your IP to look back to kind of get you in sync with where the market is right now. And since it's the beginning of the month, we're gonna go ahead and move it. We're gonna move over. We're gonna go since we just gonna go all the way to where we last traded. I was gonna put it on the beginning of the month, but let's just go there. So we're gonna put it on Friday's trading, right? And so what you want to look at, right, is with Friday's trading, we right at a high. We're right at a high, because if you go back to Thursday, we don't even have a high to go to. Like if we go back to the first trading day of the month, there's not even a high, which Thursday was the first trading day of the month. There's not even a high. We were at a high, and the only thing 20 days back is a low going from the first trading day of the month, right? The only thing 20 days back was a low. So since we right there at that high, I don't even want to play around with that. So I'm just going to do it from the first trading day of the month. So we're going to start at the first trading day of the month. And so within 20 days back, the closest thing is a low. We don't have a high 20 days back. So the closest thing is low. So we're going to go to the low there. 40 days back. 40 days back, the only thing we got is a low. We don't have a high 40 days back, because this is the 40 days back right here. We don't have a high. So the closest thing we got is a low for 40 days back. All right, we got the lowest low 40 days back. We don't have a high 40 days back. Then 60 days back, we still have a high 60 days back. Within 60 days, we do have a high, which is, what high is that? September 13th. That's what we've been using as the top of our box. We've been using that day as the top of our box, September 13th. So with the IP to look back, with our IP to look back, we have been moving bullishly. The price action has been moving bullishly after taking out sell side liquidity. When we ran the yearly low, the June low, we took after taking out the June low, right? We came down and ran sell side liquidity, right? We hit the June low we made a low on October 3rd and had like a little bounce, right? Came back to the breaking structure, and then we ran liquidity. You can tell we ran liquidity, ran sell side, because we got that strong wick off the bottom right there. That was a stop run. We ran stops on October 13th. That's what we've been using as our box bottom. Hey, look at that, right? So we started, and then we had a breaking market structure to the upside. Again, these are daily candles. We had a breaking market structure to the upside, and once we hit a breaking market structure to the upside, we've been in a buy program. We initially started, we started the buy program here, but the breaking market structure was the confirmation. And for anybody who don't know what I'm talking about when I say we started the buy program, it's like we in the sell program, your sell stops, and your sell stops are going to be getting taken, and your sell stops and your discount PD arrays are going to be getting taken and ran through, right? Down close candles. You're going to be running through bullish order blocks. You're going to be running through bearish fair value gap. Bearish fair value gaps are going to get respected. Like when you come back up to a bearish fair value gap, they're going to get respected. Anything in the premiums is going to be respected, meaning like the resistance, and anything as support is going to be disrespected, right? That's the sell program. When you switch to a buy program, aka going into a buy model, going to a market maker buy model, then your support is going to start to get respected right here. Like we ran sell stops there. What? Right? That was the first indication that it want to try to start going back up, right? So you still a little leery, right? And then we get a small breaking structure right here on the daily. Aha, that's a glimmer of hope. We got a breaking market structure to the upside, right? Right? So then we come back down to a bullish order block right there, and we respect it. Aha, that's another glimmer of hope. Now we get another break in market structure to the upside. So now we believe, okay, we're in a buy program now because we had a break in market structure to the upside. We respected a bullish bullish order block right here. Then we came up with heavy distribution, had another break in market structure to the upside. And this time we got a nice closure above the break in market structure. So now we're really believing that we're in a buy program now. We come back down and we respect another order block. Aha! And then we have heavy distribution again off of that order block and get a break in market structure to the upside again. Now we go into a consolidation. Now we're cooling off. We're sliding to the right. So now, remember what I said about when we slide to the right? Now the market is baking this in, if you will. I don't like to use baked in, but I'm just going to use terms that people like to hear. The market going to be baking this in as support, right? So now this right here, you got people willing to move their stops up under this consolidation because initially their stops was way down here. Then this right here got respected. Then some people might have moved there. Then some people might have moved here. And then some people, not this is being respected. Some people might move their stops there, right? But as they slide to the right, that's lowering our risk to reward. Let's go to those risk to reward calculators. We're going to get to charting. Just hush up, right? So we're looking at let's look at a long position, right? Risk to reward on a long position. Let's just say you play a fair value gap retrace, right? So we retracing back to this daily fair value gap right here. Let's just say you got in right at the top of the daily fair value gap. What's the low on that candle? 40, 54, 50, right? So we're going 40, 54, 50. Right, that's close enough. 40 55, close enough. Boom. Put in a order right there, 40 55, right? Initially, right, you had to put your stop all the way down here below this low there, right? That was the low you had to go to. And then this was your low-hanging fruit, this high right here, and this right here was your ultimate target. But with the low-hanging fruit, that is 0.35. That's way you risking way more than you're getting on that risk to reward, right? And then if you go to the ultimate target up to here, right, which is 43.30, really, really far away, you're still risking more, than you're getting. It's a 0.77. It's not even a one-to-one trade, right? But when we slide to the right, and now people bake this in as support. If you go below this lowest low, now look, you're almost 2 to 1 of 1.95, right? The risk to reward is getting better for people that want to buy. You know what I'm saying? It's getting better now. The risk to reward is getting better, right? It's still not a good risk to reward for the low-hanging fruit right here. Right? It's not even 1-to-1 for the low-hanging fruit, but it's giving a glimmer of hope to anybody that want to get to the high. Because on a nice pullback or a stop run right below this, that'll give people a reason to buy because the risk to reward has improved. Yep, that's all I got. That's all my spiel bill on the risk to reward. Now, we got the look back set in place. Now, let's go back. Let's go way back. Let's go way back in time frames. Y'all know how I like to do. I like to go to the monthly and then look and see what we have done. Look, hey, peep this out. Peep this out. Those lows and highs that we picked, it lines up right to monthly lows and highs. How about that? This right here is November's low. We're right at November's low. This is October's low. That's right at October's low. This is September's high. That's right at September's high. How about that? And those are our monthly high, top and bottom. Remember, them the ones that we had been picking for our monthly top and bottom already. But just using the look back, look at that. Look at how it all. Hey, my mom in here. What's going on, baby? Hey, my mom just brought us some sweet potato pie over here that my auntie made. I ain't gonna tell y'all they done ate like 3/4 of the pie. She came over, she's like, auntie brought a pie over here. I'm finna bring y'all some. 3/4 of the pie gone. I cut I cut 4 little small slices so all 4 of us can get some calandra at work right now. So me and Timothy got tempted when it got the biggest slice. I was trying to cut it even, but you know how us folk don't know how to cut a pie for real. So it was like all lopsided and lopped looped in there. And so I cut off, and then Timothy came and got the biggest slice. But thank you for the pie, mama. It was good. But yeah, here we go. I like to go back and see what we've done, where we've gone. We everybody know the backstory. We talked about that a million times. Let's see where we at right now in today's time frame. So today's time frame, this up there is too dark. I got to lower that down. It's too dark. I can't see my highs and lows, man. I can't see my highs and lows. I'll try 50. Hopefully y'all can see 50%, but I can't see my highs and lows. All right. So now, after we took out sell side liquidity back in October, we pushed up. Then in November, we pulled back down. Pretty much came a little bit over 50% of this body of this candle down, wick back up, and then closed positive. Not taking out. We took out October's high, didn't take out September's high, and then so far in the first couple of days in December, we've pushed down a little bit and started to push back up. Got like acting like it's still bullish on the monthly time frame. Looking at the monthly, we haven't cleared the high of this down close candle yet, so I don't want to mark anything there. I'll wait until we clear the high of that before looking at this as a potential order block. I would love to see a nice strong push up even past August highs before I start looking at this September calendar as an order block. I'll bring the IPDA back in a second. I'm bringing the IPDA back in a second when I start to try to look at PD arrays in the different ranges. But for right now, we're gonna start marking out our box top and bottom. We're gonna go with the same monthly box top and bottom. We're gonna go with the September. Why did I click August? We're gonna go with the September as the top because we still have not taken that out. And we're gonna go with October as the bottom because we still haven't taken it out. So we marking September and October as the monthly top and the monthly bottom. For those who don't understand what I mean by the monthly top and monthly bottom, I like to. This has been our monthly bottom. Because I know you're probably thinking, Tim, why you not going with the November low? Because this has been our bottom that we were using, and we still haven't taken out the buy side from the top of the box that we was using. So I'm just leaving that as the bottom. Like if we were to break outside of this high, this monthly high, take out the September's monthly high and close above that, then I would adjust the bottom of the box. I would start moving the bottom of the box up and pick and get in sync with the algos of the new range that they're dealing in. But as of now, I'm leaving the monthly box as it is because that's the monthly box that we started with. That's the monthly box we were in sync with. And I'm just leaving it there until we bust out of that box. We still ain't bust out the box yet. It's up to you how you want to do yours. That's just how I do mine. I'm a swing trader, so sometimes I look at longer time frames. On the monthly, that's all I want to do because there's no other PD arrays that I'm seeing in there, no volume imbalances or anything like that I want to mark out on the monthly level as of now. Let's go down to the weekly. Weekly candles. So on the weekly, I'm going to go with last week's low and high, right? Because the prices here, this is the closest low and high. So I always start with the previous week's low and high, right? So last week last week, we took out the prior week's high, and then we didn't take out this week's low over here. But since price is so high in the weekly time frame, I'm just going with last week's low because it's pretty much a relative equal low. I could very well just go with the low of the week of the 21st, but they so close to each other. I'm not fussing over pennies, right? It is what it is. Pick it how you want to mark it out. If you want to mark the week of the 21st, the week starting of the 21st, go ahead and pick it out because they're very close to each other. If you want to pick the week starting of the 14th, it's up to you. But I'm just picking last week because that's the closest to us, to price right now. That's the closest low to price right now. Weekly box bottom. Okay, boom. Now let's bring IP the back real quick. And the reason why I'm bringing IP the back right now is because I want to look at what PD arrays are 20 days back, 40 days back, 60 days back, right? So looking 20 days back, we have a weekly order block right here that I will mark. We got it's another, no, that low, we went through that, so I'm ignoring that. So we got a weekly order block right here. Got a weekly order block right here, and I'm gonna fix all of this once we get down to the dailies as far as like where I want it to actually be. So we got a weekly order block within the 20-day, weekly bullish order block within the 20-day. Where's my bullet? Okay, weekly bullish order block within the 20-day look back. Matter of fact, it's right at the tip of the 20-day look back. We have another order block, a weekly order block, and 40-day look back. It's kind of far away from price, so I'm not going to mark this one because in order to get to this one, we would have to blow through this weekly order block, and I just don't feel like the market is that bullish, right? I mean, that bearish right now. I'm hoping for a slight pullback and then an attack on highs, but I don't think we're going to get that far down. So I'm just going to not mark that out. Just keep it in mind. And as far as, I think that's it on the weekly, because like I say, we traded through this little mini one here. We already got the weekly low. We talked about it being relative equal to that, so I'm not worried about that. This low is right there at the weekly order block. And as far as above price, we came into this weekly rejection block. It was like, remember, we had a daily rejection block, a weekly rejection block, and something else. We came into it right there because we had took out the buy side liquidity above that week. We took out that buy side liquidity and had a run on stops, and it wicked down. So this is, matter of fact, this is a single candle rejection block right here. We came into the rejection block and we got a reaction off of it. We pushed down. How far will we push down? I don't know, because we came all the way down to here and then went up. So that one might be ran through, and then we may be ready to attack that buy side liquidity tie above the box top. So that's it on the weekly. Let's go to the daily. Yeah, I think that's it on the weekly. Let's go to the daily. I'll leave IP the up real quick. So on the daily, 20 days back, we already got the weekly, so I'm not going to do anything with that. We have an order block here. We didn't fill in this daily fair value gap all the way, but we're down past 50% of it, so I'm not going to mark it out. Now, mind you, all three of these candles right here constitute the full daily order block. Mind you, all three of those down close candles, because they're consecutive, right? So if we were to take into account the bodies of all three of those right there, we came down right about at 50% of that full order block if we were to take into account all three candles. So now, this is where it comes a time where you decide which PD array that you're going to be assuming that the algos attack first. And this is when I rely on the IPDA chart, right? For those, let's go to PIMDAS. For those who don't know what I'm talking about when I say PIMDAS, ICT got a IPDA, not a IPDA, a PDA. I said IPDA, a PDA chart. I call it PIMDAS because it's the order of operations. Man, I gotta. These are the screenshots from the slides I was making. Where's PIMDAS at, man? There it is, right there. PIMDAS. You're on the wrong screen. Okay, this is when I go to PIMDAS, right? So looking at PIMDAS, and put this over here. Looking at PIMDAS, right? So if we're in the premium and we're coming down, right? So coming down, you got mitigation, breaker, liquidity cores, fair value gaps, order blocks, right? So we got a fair value gap and we got an order block. So if price looks for fair value gaps first, then because of PIMDAS, I'm assuming that it's reacting off of 50% of the fair value gap before the order block. So we're going to say, okay, I'm not going to mark the fair value gap because boom, we hit 50% of that, more than 50% of the fair value gap and got a reaction. So now I'm going to mark the order block, but when I mark the order block, I'm not going to mark the entire order block, right? Since this is such a teeny weeny little candle right here, I could just mark, I'll just mark the body. It's not that little, but usually when it be like a small order block like that, I like to mark, I end up marking the whole candle like this, right? Because it's like, it's such a small body. This is a bullish order block, right? I end up marking the whole candle like that because it's such a small little candle body. Because if I, just mark the little body like this right here, you know what I'm saying? It's like such a little body. It's not really beefy. So I'll just mark that. Instead of marking the entire order block, I'll just mark that entire candle because I think 50% of the order block was like right here. So that's close enough for government work. So now I'm marking the order block because according to PIMDAS, it reacts to the fair value gaps first, right? So marking the order block on the daily, that's 20 days back, above price. Don't want to mark anything above price. We came up and we kissed this order block right here and sold back down. So I'm not going to mark that because we came up and we had a reaction off of that order block. On the lower time frame, it was an order block. On the weekly time frame, we had got up into a rejection block. So we reacted off of this order block over here already. So I'm not going to mark that out. It's not active anymore in my mind. Pull back, fair value gap, order block still active. So coming down below price. We got the weekly, nothing I want to mark out on a daily because we got the weekly order block here. Just keep in mind, we got a daily fair value gap that we still haven't finished yet. We tapped into it here on the consolidation. We tapped it here again. So we just consolidated like at the top of the range and then we took off. So we still got a daily fair value gap. We still have not completed. We got a daily order block at the bottom of the weekly order block right here. This daily bullish order block right there. Then we got a daily swing low that's down here. It's kind of far away from price. So I'm not going to mark that daily swing low down there until after we bust through. If we bust through this weekly order block, then I'll start marking this lower stuff on there, on these lower PDAs, that because it's really far from price right now. I think that's all I'm going to mark for chart prep. That's all I'm marking. Let me hide the look back. Make a little folder for this. Name it TDA. TDA 12. For the day my sister's birthday. Y'all say happy 55th. Geach 55, mama. Y'all say happy 55th to my sister. I think she 55. 12. 4. 22. Yeah, I think that's all I want to mark. Just the daily and the weekly. Yeah, the monthly, daily, and weekly. That's all I'm gonna mark. Let me mark my daily. I ain't doing no equilibrium or nothing. Y'all got me slipping. I ain't marked my daily high and low. So Friday's high, daily high. Y'all got me slipping, man. What is next Friday? The 9th. I need this to go to the 9th. All right, 9th. Y'all got me straight up slipping. Daily low, daily box bottom. All right, here they go to the 9th. All right, they're gonna go to the 9th, to the 9th, to the 9th, to the 9th. Everything got to go out to the 9th. To the 9th, to the 9th. Everything got to go out to the 9th. Okay, now let's check. We ain't even got the equilibriums or nothing. Y'all got me slipping. I don't know how y'all got me slipping like that. The weekly order block falls right at the 50% of that weekly order block falls right at equilibrium of the overall monthly box. That's not a mistake. The algo's algoing. Equilibrium range. What's that? 38, 50. Oh, I got it right on time. How about that? Put it out a little bit farther. Change that color. Orange. Yeah. All right. And then my weekly equilibrium. Weekly equilibrium is 40, 25, 75. Weekly equilibrium 40, 25, 75. Ah, come on. And click. Whoa, what just happened? Where'd that line go? For the 25, 75 for the weekly equilibrium. Make that purple. Like weekly. I didn't put my template on first. Equilibrium. Daily equilibrium. Weekly equilibrium. And why is that not? Hold up. Why is that? It's the wrong color. Yeah, hold on. I gotta say this as the right color. There you go. Yes. Okay. Weekly equilibrium. And then let's go to Friday. I just like to know where I am as far as discounted premium markets. Okay. And that's 40. 40, 46, 25. 40, 46, 25 is the daily equilibrium for the equilibrium on the I got a daily equilibrium. Ain't none of this right, man. The colors all wrong. What was I tripping on when I did this? All right, save as daily equilibrium. All right, save. Yes. Okay. All right. What did I just delete? I had two fibs on now. Okay. So that's everything that I'm going to mark as far as um PDAs. Right now we're still in the premium. Right, we're in the premium of the premium of the premium for the overall box. Right, we're in the extreme premium. Let's see how much of a premium we are for the overall box. So from top to bottom, I stretched that the wrong way. So from top to bottom, let me put my other little these on. No, I stretched it the right way last time. I was right the first time. So from top to bottom, we're in the extreme premium prices here. Price closed around, just say 40.74. It's close enough for government work. That puts us in extreme premium. We're well above the 80% retracement, right? Coming back to it. So we're in extreme premium for the overall monthly box, right? That actually puts us in a premium of the premium because we go from equilibrium to the high, right? Equilibrium, see where we consolidate, and right there, we're consolidating right around equilibrium of the premium. See these long days, we was there 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. On the 13th day, we blast out, stayed out 14. Then on the 15th day, we came back to it and then ricocheted off of it, right? Right there at equilibrium. So that equilibrium is that's the equilibrium of the premium. So when you split your box down into quadrants, right? This is the premium of the overall month box. And now from 4,007 to equilibrium, that's the discount of the premium. From 4,007 to the high, that's the premium of the premium, right? So again, we was consolidating right there around equilibrium of the premium range. We consolidated there for quite a few days. Blast off, broke outside the consolidation, got a break in market structure to the upside, traded back down into the fair value gap, into this order block, and then reacted off of it right at equilibrium. Nice push off of equilibrium right there. Now we're back into a premium of the overall box, coming down to our weekly, right? Weekly level. We're in a premium on the weekly level, right? Stretch out the box a little bit so we can see it better, right? So we're price closed out here. We said 40.74, set 40.75, close enough for government work. Closed at 40.75.50. So we're right at a premium. We're at just that, because 47.625 is a 79% retracement, and so we're in a premium. We had a 79% premium on the weekly time frame, right? So we're in extreme premium as far as the weekly level. We're at extreme premium as far as the weekly level, 79% retracement on the weekly. On the daily level, again, as you can see, we're in what you guessed it. We're in an extreme premium on the daily level. We closed out at an extreme premium on the daily level right there. So I like to sell in the premium, buy in a discount, right? The market, it needs to give me a setup before I jump into anything. Right now, I ain't trying to do any buying while we're this high into a premium. I'm looking for a good reason to sell something in the short term, because I feel like the market is bullish. The market is very bullish. The market is hyped up and looking like it's setting up for a Santa rally. So while it's in this premium, I'm just looking for something to scalp short time to the downside. And then once we get us a slight little pullback, I would love to see us pull back to this order block right here at this equilibrium. I'm not saying we got to do it this week. You know what I'm saying? I would love to see us come back down there this week. Because shout out Dustin, I can't remember where the video is. I can't find it, but he was doing a breakdown for December's trading every day of December, and he was talking about how historically December tends to be better on the second half. The beginning of December tends to be, lackluster or choppy at best, and then it tends to be better on the second half. If we continue all this chop suey we've been doing since the beginning of November 10th, since November 10th, we've been chopping sideways. We've been sitting sideways. Boys in the days, sitting sideways. We've been sitting sideways. So going into next week, man, I would love to see us revisit this wick right here at least. I would love to see us get down to this daily order block right here in the beginning of the week. That would be love for me. Get down to this daily order block, revisit this wick at least, right? At least come down to a weekly equilibrium, a daily equilibrium. At least come down and revisit this wick and then finish the week out bullish by taking out these highs that we've been looking at forever. Our little eyeball been sitting over there. It was an eyeball somewhere. Was it on here? I thought we had it on this chart. Or is it on Spyline? Is it on Spyline? Let me see if it's on Spyline. Yes, there's the eyeball. It's been over there so long, it needs some Visine. It's been sitting over there for a minute. It needs Visine. You know what I'm saying? And then Spyline, as you see, I already marked this out the other day. And because it wasn't, I just had to move like the high and the low and the equilibrium on the daily. That's all I had to move. The chart stayed the exact same because all we did was gap down, then pushed all the way back up. Now on Friday, I said I was hoping we would get back up to this wick. I did not expect us to get all the way back up to the body. I ain't gonna hold you. I was like, I at least want us to push back up to this wick so we don't have that full gap to deal with. But I did not think we was gonna push back all the way up to the body, and we did. But yeah, man, that's all I got as far as price action. I want to see us. I would love to see us come down in the beginning of the week and end the week bullish. I would love to see that. If the market decides that it wants to take off, if the market decides that it wants to take off to the downside where it start the week off bullish and then sell off, I'll take that too. I won't be as happy with that, you know what I'm saying? Because since we had this strong reaction here with this wick, I would love to see us revisit that now and then take off. Right? That would be healthy price action in my mind. In my mind. In my baby. That's it, man. That's all I got. Who got something? Who got something? Laverne saw you. Cool it. What's good? Taking a break. Saw that. FC saw you. Robinson, my mama. What's up? What's up, Marcia? Happy Sunday. Hi, y'all. Happy 55th. Appreciate the love on my sister for my sister. My sister. I ain't got my phone. I can't even record the screen so she can see y'all saying happy birthday. Oh, I know what I can do. I can take a screenshot right there. Let me get as much as I can in there. Right there. Right there. Oh, print screen. I got Photoshop still open. Make sure I got, let me see if I got, we 53 minutes in, man. Hey, Marcia, get off my screen. What they said? Essentially need to, I ain't even signed in. Got to be more careful. Hold on, man. Y'all know I can't walk and chew gum at the same time. I need my phone. What is? Bring me my phone, son. Yeah, bring me my phone. You got my name? Yes, bring me my phone. You said what? Bring me my phone. Falcons just lost. They just lost? What was the score? The Falcons just lost. The Steelers just beat the Falcons. It was 1916. The Steelers punted it, right? And then landed on the 1 yard line. It was like a perfect punt. And then when they got the ball, he passed it like 30 yards down the field, got picked off. Oh. With 30 seconds left in the game. Threw an interception at the end. Yeah. So sad, so sad. At least Georgia won yesterday. Hey, sign up my MacBook. I know y'all like why Tim just gotta sit in here while he do this. Cause I want to. Cause I want to. I mean, my spiel bill over. I'm done talking about the price action. Y'all know where it's at. Okay, that's not what I want. I hit Alt print screen. Come on. Alt print screen. There it is. Okay, now I'll save that picture later. Okay, which said essentially need to get past Powell and CPI December 13, 14, aka middle of December. Yes. What's that, an eagle or a falcon? That's supposed to be a falcon or eagle. You're very welcome here to Learn the Chef. Hey, that's all I got, man. Again, if y'all do not know, part two of the ICT series is up. If you go to the hey, that thing say 19 likes. Hit the like button. If you go to the description right here, you got ICT concepts explained. The lingo playlist is up. That's part one of the series. ICT concepts explained price action playlist. Excuse me, that's part two of the series. Start with ICT lingo, the lingo first, and then move on to the price action. Part three, the strategy section is coming soon. The reason for me doing this is to help somebody get their aha moment. It's not for me to try to take any credit from Michael, aka ICT. It's just that this is the strategy that I trade. And so I want to help people understand it, because sometimes it's like me. I like sitting down, listening to long, drawn out things when people talk about stuff, because it be little gems inside there. Everybody ain't got the patience to do that, but I like to sit down and listen to stuff like that. So what I've done, I've gone in and I just gave the lingo as I understand it, as clear as I can make it, right? Based off what he say, I show you what he say, and I show you what I understand. With the price action, I take those PDAs that we talked about in the lingo section, and I go through the price action, and I walk you through a bullish scenario and a bearish scenario. You know what I'm saying? So like basically, let me show you what I'm saying. I can show you better than I can tell you. Instead of running through a whole video, I'll just pull up my what's the name, right? Let's go with the last one I had open, the swing highs and swing lows, right? This is the last one I had open, the swing highs and swing lows, right? And with the swing highs and swing lows, let me see if y'all can see my, yes, you can see my screen, right? So basically we come in with the swing highs and swing lows, and then I go through, and this slide look familiar because it was in the first one. You know what I'm saying? I break now. I just do a quick refresher of what the swing highs and swing lows are. You know, so I explain, you know what I'm saying, what the swing highs and swing lows is based off this where buy side liquidity and sell side liquidity like to hide, right? Then I go in and I give you the Lil Timmy Rogers version. I don't give you the ICT explicit version no more. I just give you what I understand it as. If you want to see the ICT version, I tell you to go back and look at the first video, or go look at his video of him explaining these PDAs, right? I just give you the breakdown of what I think it is, right? This is my definition of what the swing high is. This is how I see it in my mind, right? And then I come to a blank canvas, right? We go to the blank canvas, and then now I give you the opportunity to find it. With the swing highs and swing lows, there's a million of them everywhere, right? So the one I'm looking for is in this area right around here, right? But Tim, why are you picking that one there? I'm glad you asked that question, Lil Timmy Rogers, right? The reason why I'm looking at this one right here, because when it comes to swing lows and swing highs, right, I want to look at the ones that's in, I treat swing lows and swing highs as the top and the bottom of my box, right? And looking at the price action on this screen right here, this is the highest swing high on this screen right here. So that will initially be the top of my box. I didn't say this in the video that I'm doing. I'm just freestyling this right now, but this is the reason why. Like in the videos I'm saying, remember some of the stuff I'm saying about premium and discount, because this gonna be important in the strategist version, right? Not every swing high merits all your attention. Not every order block merits all your attention. Not every fair value gap is a fair value gap. It may just be a simple imbalance. You know what I'm saying? But understand when it's a fair value gap, when it's going to be a order block, when is it going to be a breaker, and that's all based off of the TDA that we be doing, the top-down analysis that we be doing, like what's the narrative, what's the bias, you know what I'm saying? All of that come to play in effect, right? So boom, then you understand that it's a 3-candle pattern where, you know what I'm saying, the middle candle got a lower high to the left and lower high to the right. Then boop, I put the annotation on the screen and I tell you the price rallies and then it sells off, right? The high that's formed, it has a lower high to the immediate left and right, right? So it rallies, it sells off. The high that's formed right there has a lower high to the immediate left and right. And then, boop, I put it on the screen for you to see. Now, that's the swing high right there. That's where we get the right there. That's the right? Then we're looking at the swing low, right? Explain what the swing low is. Boom, come back. Give you a blank screen, give you an opportunity to look for the swing low, right? And then I say it's looking at this area right here. This one here, I threw a little curveball. I say, do you see it? Do you see the one I'm looking at? Yeah, I see it. I got it. You're looking at this one right here. Ain't wrong. I was looking at that one. I fooled you. I fooled you. But it's good that you picked that up because that is a swing low. 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 Just to show you, hey, we ain't got to be looking at the exact same spot. Long as you can identify the PDA. And then we'll get into the importance of finding, being synced up with the algorithms later. You know what I'm saying? So now, boom, I picked this right here. I picked that there. I say the price sells off, then rallies. The low that's formed has a higher low to the immediate left and right, right? It sells off, price sells off, price rallies. This low right here has a higher low to the immediate left, higher low to the immediate right. Then boop, there you go. You got the low, you got your higher low, you got your higher low. And that is the way it's, you know, pretty much presented for all the different PDAs. You know what I'm saying? Get off my screen there. That's the way it's presented for all the different PDAs and throughout the list. You know what I'm saying? So shout out 100 say turtle soup. Right? And shout out 100 say turtle soup. But yeah, so it go through all the different PDA, all the different PD arrays, and finding the bullish and the bearish in the price action. You know what I'm saying? And I try to spell it out, make it as clear as possible. You know what I'm looking for when I'm looking at the little lines when people draw lines out, be like make a higher high, lower low, make a this and do that. It looked fine when you got all them lines on there, but when you start looking at them candles and looking at the different time frames and go to getting confused, and it don't be like the mannequin body parts don't be exactly how it is. You draw the head and shoulders, and your head got a shoulder and the shoulder got a head. It don't be looking the same. You know what I'm saying? So that's why I like just take that stuff, go back and back test to your heart's content. And then when we drop the strategist playlist, hopefully that give you a nice little starter pack to be able to look at the different PDAs you want to, because you don't have to trade all the PDAs. I advise that you don't try to trade all of them. I advise that you pick one strategy. You know what I'm saying? If you want to be a fair value gap trader, pick one mod, make you a model based off of fair value gaps, right? My model for fair value gaps is run liquidity, have a break in market structure, and then retrace back to a fair value gap. That's my model. When I made it, I named it the liquidity run reversal. ICT came out and dropped pretty much the exact same model for the 2022 mentorship. He just called it a fair value gap model. He just called it the 2022 model. I can't remember. I think that's all he called it, but it's the exact same thing. But that's the model that was my go-to model. So pick a model based off of, you know what I'm saying? It can be based off several PDAs. Like you can have a fair value gap trade, or you can have a breaker trade or a fair value gap trade where you only buy the fair value gap if it come back to a breaker, right? You watch the market form a breaker, right? And then when it have a fair value gap right in line with a breaker, that's the only time you take a fair value gap trade. Or the only time you take a breaker trade is if it have a fair value gap right there at the breaker, right? You can see a breaker form, but if it don't have a fair value gap at the breaker, you're not taking the trade. You're only taking it if it's a fair value gap at the breaker, because you feel like that strengthens the breaker and the fair value gap, because it's coming back to a reference point, and it's also coming back to an imbalance. So you got a reference point where the algos drop some breadcrumbs, and then you got an imbalance that it has to come back in service. So it's like, okay, boom, that's a go right there. I'm only taking breaker trades if it's got a fair value gap that lines up with the breaker. It's, you know, so you can put together your own model, but study the lingo, study how to find them in price action, go back and back test how to find them in price action. And then when I drop the strategies, you can put together your own strategy now that you got the lingo and how to find them. You know what I'm saying? You could just, when I put out the strategies thing, that's just going to be some stuff that, you know, I come up with, but you can come up with your own now that you got the lingo and you know how to find them. Go back and back test to your heart's content, and then just come up with your own model and then stick with that one model. Don't jump all over the place. If I take an order block trade, don't jump off breakers to come to order blocks, right? And here's the gag, right? If you trade in breakers, you already trading order blocks, because an order block comes from a breaker, right? You know what I'm saying? Every order block ain't going to become a breaker, but every breaker came from an order block. It was an order block before it was a breaker. You know what I'm saying? So it's like, don't try to jump from one thing to another. You know what I'm saying? Come up with your model, build your model, just execute off that one model. You hear me? Hey, man, I ain't going to get on my soapbox today, man. I ain't going to get on my soapbox. I'm a point guard, so I got to learn them all. Hey, learn them all. Learn them all. It ain't nothing wrong with learning them all. It's good to learn them all so that you can be versatile. But the problem that many of us, like myself, get is like, when we're trying to do so many things at the same time, it's like we get lost in the sauce. Like, then we start getting confused. Like, is it this? Is it that? It's when you get good at one thing. That's why specialists can charge more, right? If you can go to a general practitioner, or whatever you call it, a general doctor, right? Like the doctor that take care of basic stuff, right? But when they refer you to a specialist, that specialist charge more money, because that specialist specialize in that, right? That's all they do. So they can charge more for it, because why? They know that inside and out, and they are the best at that one thing, right? When I used to do videography and photography, right? I used to shoot like sports pictures. I used to shoot like family pictures. I used to do all kind of stuff, right? And when I started trying to do weddings, right? Everybody that went to my site, they used to be like, I see a lot of, you know, family pictures and a lot of sports, but I don't see any weddings. Not realizing, if you like what that sports picture look like, or if you like what that family portrait look like, you're going to like what your wedding picture look like. But since they didn't see wedding pictures, I'm like, these are engagement. These are peep couples that's getting engaged. This is an engagement session. Yeah, but where's the wedding pictures? They couldn't see wedding pictures. So until I started getting wedding pictures and wedding videos on my site, it was real hard for me to book weddings. Why? Because they wanted to see somebody who specialized in shooting weddings. Specialize in your one setup, and you will be a beast. I started becoming consistently profitable when I stopped trying to trade everything. I stopped trying to trade levels. I stopped trying to trade. I was trading levels. I was trading breakouts. I was trying to trade mother bar, inside bar. I was trying to trade just FOMO. I used to wait on like news days, and when the candle take off, I would just hit buy and then hope it keep running. It was just like some weird momentum thing that I was trying to do. Like when it on news days, when it just take off, I would just hit buy or hit sell, whichever way it was going, and it just hit it and try to catch a trade. right? It'd been many days. I'd have caught some good trades like that. Been many days I got bust in the head too. I said I wasn't gonna get on my soapbox. We all used to gamble. We all used to gamble. One had to say he a specialist. You feel me? You feel me? Hey, that's all I got, man. I appreciate y'all for hanging out with me. I don't see nobody pulling up. And so we gonna, what's up, Gabriel? When'd you pull up? What's up, Kush? What's going on, Kush? When you pulled up in here? What's going on, Trinisha? I said what's up to you. When y'all pulled up, man. Hey, that's all I got, man. I appreciate y'all for pulling up. Shout out to everybody that pulled up on Zay yesterday. Zay gave out some good information. If y'all ain't get a chance to check out his Sativa Saturday, go check that out. It was some good information put out. Tomorrow is Monday. We'll look at the economic calendar tomorrow. We ain't look at it today, but we'll look at it tomorrow. I think that's it. I'm getting hungry, so I'm about to dip. I appreciate y'all, man. I see y'all in the morning at 9 o'clock. I see y'all in the morning at 9 o'clock for the overnight price. Action. What's that coin flip? What he said? What he said? I used to bet on calls and puts. A coin flip. At the same time, I got calls, I got puts at the same time. Hey, man, I appreciate y'all, man. I appreciate y'all. I appreciate y'all. Hey, man, we're going to see y'all in the morning, 9 o'clock a.m. Eastern Standard Time. Yeah, man. All right, man. Y'all enjoy the rest of y'all weekend. Enjoy the rest of your Sunday. Enjoy your families. See y'all in the morning, man. Gone. Yeah.